Hi, everyone. We are live. It's a new you, new me, new you, new real estate. The one thing that is not new, if you watch our episodes, is we need inventory. We don't have a lot of new inventory out there.
That
Uh,
is new. That sounds pretty new news to me. You mean there's nobody listing their homes for sale?
we're getting properties listed, but not the degree that we need to
I
go over
thought
the.
Santa was supposed to bring us a bunch of listings. Is this not? This is not true, I guess.
That is not the case so far. Santa has not. You have not been a good
Yeah.
boy. Santa has not brought those items. So this is the market as a whole. All right, so we're talking about active properties, 2,300 properties, 2,300 properties. Again, I like to use a reference point that we were sitting at about 7,000 in 2019, July of 2019, 7,000 properties. Yes, we get most of an influx of properties in July. That's still, if we're talking about 6,000 properties on the market, we're close to about a third of the properties that we've had before. So that's yeah, we have more pending properties, which we've had pretty consistently, more pending properties than active properties. Again, 3 million to 700,000, about close to even. We still have more properties pending. When we're talking about active under 700,000, we're talking more than double properties pending. We're talking about detached close to 3 times as many properties pending. The attached market, the interesting thing about the attached market, those margins have actually separated a little more. So we were sitting fairly pretty close to attached, active and pending, very similar in the attached market, but the pending has kind of jumped up a little bit. And if you don't know what pending means, it means it's under contract. Okay, so it means it's under contract. Doesn't necessarily mean they're all going to sell. It just means that they're under in escrow and they are projected to sell. So be aware of that. So we have seen that attached market get a little bit hotter than it was a couple months back. And something I've been pressing a lot is that if you're looking to buy, you're looking something in the attached market. That could have been a market you could have focused on. It looks like it's getting a little bit warmer more recently. How are
It's
the rates
getting
going?
warmer. It's getting warmer as the nights are getting colder. Is that what you're saying?
That's one way of putting it. Yes,
Okay.
that's one way of putting it.
Okay. Well, Vinny, I wish I had some. I have some news I wanted to share with you because a lot of people out there, they don't really realize what's really happened on the bigger picture, and they go, "Our interest rate's going to stay like this for the next 6 months." Well, in December, when the Bureau of Land Statistics came out and released their job losses, they reported a $140,000 loss of jobs.
Wow.
That's huge. It was projected to be 65,000 of jobs created. So what that means is more than double job loss. That's very bad. The other thing that's interesting is the unemployment rate is still around 6.7%. I don't really think that's realistic. That's what the government is pointing out. I think more than 6.7% of people are unemployed right now. If you look around San Diego, there's a lot of people not working in bars, restaurants, businesses, closed, a lot of things. So when you take the bigger perspective and you look at this and go, well, a lot of businesses aren't open. There's still a lot of job loss, and we still have lockdowns going on. This tells me that rates are going to stay low the next 6 months. They're projected to tick up a little bit, probably an 8.25%, but that's still going to put your historic rates around 3%. Right now, they're still down at the 2.6, 2.75 APR, 2.77. They're still very, very low.
If you bought in the last, let's say, 5 years or so, you really should be talking to David about refinancing. If you've bought, longer than that, maybe you don't look at refinancing, but if you're looking to add something to your property or upgrade your property, maybe you look at a HELOC, maybe you look at something else. But if you bought in the last 5 years, it's probably a good time to refinance. Or if you're looking to take advantage of the market, sell your property, get the equity out of your property, and buy something a little bigger. The market, as you go up in the higher price points, the market does cool down a little bit. So understanding the different markets can help you out especially for those move-up buyers.
You're also looking at, your buyers that are up in the jumbo market. also very different because if tax structure changes in California and taxes become different, you're going to see a lot of those higher end properties become more available at maybe a better price. I mean, maybe I'm wrong here, Vinny, but I think if people start exiting who own homes at around 1.5, 1.4, they may sell it at a lower price because a lot of people can't buy $1.5 million houses. I know in San Diego that's not considered a lot, but I still think it's a lot.
It's really different markets you got to focus on. I mean, if you're talking about a 1.5 in La Jolla, those properties are selling like hotcakes. But if you're talking about a 1.5, I mean, in
1.5 in Santee, that's gonna be
1.5 in Santee. That's, I want to see that house. But 1.5 and maybe.
You ever been to my house in Santee? It's 1.6. I mean, it's a mansion.
Yeah, I mean, if you have 1.6 in there, you're going to get a lot of value right there. So, yeah, if you're looking to buy, just understanding the micro markets, understanding what's possible, and something that we try to say on every single episode is we all have a goal when it comes to real estate, right? And sometimes we think that we can understand everything that's happening on a daily basis. You have to remember that myself and David are doing this on a daily basis. So we're finding the ins and outs, knowing what are going to rates, knowing the micro markets. So if you have any kind of goals or future goals that you're looking to accomplish in a year, 2 years, 3 years, 4 years from now, feel free to reach out to myself or David so we can actually put together that game plan for you and help you get from A to Z.
You know what? With you mentioning Z, I thought, I didn't want to get to an end here, and I don't want to sound like a doomsdayer, but there's something else we didn't mention, Vinny. And over the next year, if there's more government stimulus and more spending and more dollars come into the economy, your value of your US dollar will go down, but the value of your real estate will go up. So I mention this because a lot of people go, oh, is real estate going to continue to go up and up forever? No, me and Vinny both agree there will be a decline. We do believe, there will be a peak and there's always a fall. But at the same time, I'm pointing it out that real estate is a tangible asset. And if more US dollars are created and more government stimulus and more spending, that creates inflation. And real estate is a great asset to protect yourself against all that stuff. So if you're looking to put your money into something safe, you may want to attend one of our investor seminars. See how I slid that right in there?
That's fantastic. Well, we try to keep this under 10 minutes. We are going to do, not this weekend, but we are going to do more buyer investor seminars in the near future. Subscribe, share. If you have questions, reach out to myself or David. And I don't know what platform you're watching this on, but join us every Monday and Friday at 4 o'clock.
We have millions of followers, Vinny, and it's crazy to think what channel they're watching us on. We're getting similar to like Joe Rogan, I think. Would you think?
Yeah.
No.
All right, man. Well, thank you, everyone, for watching. Have a great one.
Have a good day.